So you're a business owner and you have to pay quarterly taxes, but your accountants never explain to you how they really work and why they're so important. Well, in today's video, that's exactly what we are going to unpack. And why should you listen to me? Well, I'm a financial advisor that specifically helps entrepreneurs just like you. If we hadn't a chance to meet, my name is Luke Turner. I'm the co-founder of Moment Private Wealth. If you want to learn more about Moment, check out the link in the description below. But let's dive into today's video, which is quarterly tax payments. First and foremost, what I want to share with you is that as a business owner, your number one superpower is being able to leverage the tax code. Okay? The US tax code is built for businesses. It's built for business owners, entrepreneurs. It is the easiest way to minimize taxes is by either running a business or, if you don't have one today, starting a business. But today we're going to be talking about that very specific topic, which is quarterly tax estimates. How do they work, and do you need to be paying them? Let's dive into some basics around taxes and how they work for business owners. A typical business owner, the way that it's going to work is you're going to have some sort of W-2 wage or W-2 salary, just like you would if you were an employee of any other organization. And if you look over here on the corner of this screen, what you'll see is a breakdown of what a W-2 pay stub normally looks like. We're going to have our gross income at the top. Right underneath that, we're going to have FICA, which is going to have Social Security as well as Medicare. Okay, underneath that, we're going to have our federal tax withholding and then our state tax withholding. But what I want to highlight here is the federal tax withholding, okay, because this is the first element in deciding if you need to be paying those quarterly estimates. So on your W-2 pay stub, there is going to be a line item that has federal tax withholding. So let's look at an example here and assume that you're paying yourself a $100,000 W-2 wage and you're withholding $10,000 in federal taxes. Let's bookmark that $10,000 and make sure that we're thinking about that as money that we've already paid in taxes. Okay. Additionally, inside of your business, you are going to make an additional $400,000. Okay. And that $400,000, it's still going to get taxed to you even though you're not running it through payroll. Now, here's where the big problem that most business owners run into. They make $400,000 in their business. They leave it in their business, so it didn't actually end up in their bank account anywhere. And then they get to April, and their CPA tells them you have to pay an extra $100,000 in taxes on that $400,000 in income. And you're like, what? And that's where these quarterly tax estimates come in. So how does this work, and how should you be thinking about it? The best way to handle quarterly tax estimates, well, actually, let's take one step backwards. How are they normally handled? Typically, the way that it works is when your tax return gets filed from the previous year, your CPA is going to give you tax vouchers or estimated tax vouchers. They're going to say pay these on a quarterly basis. How do they come up with those numbers? 9 out of 10 times, what they're doing is they're taking your taxes from last year and then they're multiplying it by 110%. Or take your total tax and multiply by 1.1. And the reason why they do that is an easy way for you to avoid any penalties and interest. So if you paid $100,000 in taxes last year, you need to make sure you pay in $110,000 in taxes. So 100,000 times 1.1 is 110,000 in order to avoid any penalties and interest. Now, the problem that most business owners run into is what I just mentioned before, is that year over year they're making more money and the business is continuing to grow. And as that business continues to grow, what's going to happen is that you're going to owe more in taxes. But you paid in $110,000 and you're thinking, I'm good. Well, that's where these estimates come into play. So let's get back on track here and let's talk about how we should be thinking about quarterly tax estimates and how we do it at Moment for business owners just like you. What we do is we look at all your income sources. So your W-2 pay stub, potentially your spouse's W-2 pay stub, and then we're going to get your P&L for that quarter and actually look at how much profit did the business actually make. Then we're going to run a specific tax calculation based on those numbers to give you the exact number you need to be paying in from a quarterly tax payment perspective. It's very important to make sure that you're looking at these numbers on a quarterly basis or at minimum on a semi-annual basis to make sure that you don't get that big tax surprise come April of the following year. So if you don't take anything else away from this video, hear this. When we think about taxes, we need to think about it in advance, okay? Most business owners are donating 5-6 figures to the IRS every single year, all because they're not thinking about it before 12/31, okay? So I'm shooting this video in October of 2025, okay? If you watch this video between October, November, December of 2025 or any other year, please make sure you are doing planning and If you're thinking, I don't have a plan in place, I want you to pause and click the description below to sign up with a meeting with our team. If you enjoyed this video, please subscribe to the channel. We're putting more and more content out for business owners just like this. Have a great day.